What is up, everybody? This is just going to be a quick, nice and simple market recap as I was not on the charts today. Because it was FOMC Fund Rate Day, it ended up not being as bad as it was December 18th. The Fed decided to keep interest rates the same. And yeah, so fund rates days I always just stay away from, not an environment I want to put myself in. But let's cover price action. So on the daily, we obviously opened up this daily imbalance and had this new day opening gap within it. And that was my drawn liquidity for today. I wanted to see this get filled, and we were in it already pre-market. Same again on ES. I won't really talk about EX except for SMTs, so don't expect that. And then zooming in, we can see yes, we're in the 4-hour imbalance as well on both indexes, and ES actually filled the gap, which is something important to note. ES did come up and we did fill the gap. So NQ doesn't really have a reason to fill this gap anymore. It's like an SMT kind of thing, but with a gap. I don't tend to use that often, but we do. And we also had rebalanced now to equilibrium of the range, and also we had tapped OTE of the range as well. So this is an area we expect to reject. We've already filled the new day opening gap on ES, so I'm bearish. I would have been bearish going into the day, and I was thinking that anyway. Like if we go back onto replay and go to here, I'm very much bearish still. We've filled this daily gap now, back in OTE and whatnot. So I was very much bearish. I know this is all hindsight anyway, but I was on the charts sort of at the time. So where can I expect price to draw towards? Well, we've got this 4-hour gap here as well. That could be a potential target. Also, so then obviously going into open, we had taken this internal level, and there's not really a point where we can get a change in the state. Let's go ahead and mark out market open. We had not ran that imbalance yet. So again, that's not something we can take into account. Either do we have an SMT at these highs right here? No, not a clean one. I mean, there's an SMT here, but again, it's not very clean, so it's not something I'd maybe consider. Zooming in again, though, we'd had an SMT. This is the series of up close candles on the 15-minute that put in that SMT and took that internal high. Yep, I'd class that as the internal model. Put back on our standard deviation, and let's go ahead and mark that out in red. And also this sell side level that we had nestled on the 4-hour imbalance. So going into open, we obviously had a 15-minute change in the state of delivery off of this move up, because this is the move that took the internal high. So this is our 15-minute change in the state. This is the manipulation leg. The rest of these aren't true manipulation legs because we didn't take some form of internal liquidity and put in an SMT. So we had a 15-minute change in the state, and we've displaced, very strong displacement. We've ran this 15-minute gap and also opened a 15-minute gap as well. So we can expect this 4-hour to be the draw after filling this daily imbalance, putting in the SMT, taking the internal high and whatnot. And market opens, and it looks as if we already come up and filled this 5-minute gap. So no SMT at any highs. We did at market open. We'd had a 15-minute change in the state, internal high taken in daily imbalance, and NQ filling the daily new day opening gap, volume imbalance, whatever you want to call it. And then right at open, pre-market, we start to dump. So would this short have been a trade I would have taken? Probably not. Because it was an entry pre-market. Do we have a random 1-minute SMT off of this? I very much doubt it. We've got these two equal highs right here. No, yeah, there's no SMT, but we take those equal highs pre-market. That's our change in the state of delivery right there, because that's the last move up. So where does that standard deviation put us as well? Again, -4 lines up. So whether an entry after the 9:30 candle, it's a bit risky to the 2.5 deviation of the 15-minute change in the state, which is up here. This manipulation leg is this projection, or just to the sell side on the 4-hour imbalance. It's still an OKR trade, but it's not something I would have taken. So what I was taken, and if you follow me on X, I posted this, saw some good opportunity, which was right here. So obviously that initial sell-off at open left behind a 5-minute and a 15-minute, which is the main one. 15-minute imbalance, and then zooming in with NQ and ES, we put in an SMT, I believe, a very strong one at these highs as well as these highs, so I'm marking it out as this one. We put in that SMT, very strong, as you can see, those highs to those highs. Strong SMT in a 15-minute imbalance, and we've taken all these internal highs. Now there's a reason why you wouldn't enter on this candle, because we didn't get a 1-minute change in the state, we didn't get an inverse fair value gap. But right here, what's that last up close candle that puts in the SMT? This one right here. So that's our 1-minute change in the state. We also open up a 1-minute imbalance, many entry models here, and also the tiniest ever inverse fair value gap. So the best entry for me would have been the tap of the inverse in the imbalance, stop at the SMT high. And where can you target? Well, you're confident these equal lows get hit. That is the low-hanging fruit. That is the internal model playing out right here. That is the internal model. And that's a 2.02. Our trade, nice and simple. Nice and simple. This is what I hoped would have happened on, if we look at my journal, on Monday. No, not Monday, Tuesday. This is what I hoped would have happened when we came back up to here and filled the 5-minute imbalance. I would have hoped we would have filled this imbalance, tapped this break, and then continued lower. That didn't happen on Tuesday, but it did today, because we had the change in the set in the 15-minute, we had the initial sell-off, we pulled back to the new imbalance, put in the SMT, a very strong SMT, had that displacement, had the pullback, and target the internal low, and then you can potentially leave runners to the 3.5 to 4. But that sell side level is strong, is what I'm confident gets hit. Nice stop loss, nice risk. So yeah, there was plenty of opportunities. There was plenty of opportunities on this day. Am I annoyed that I didn't take them? No, because I don't trade fund rate days. I've made that a rule for myself, and it's not in my trading plan to trade these days. So I'd stick to my plan, and I went out for the day. But that is definitely the best trade that you could have taken. And after that, price was really choppy. I believe that was just after the 950 1010 macro, which opened up right here. So 950 opens and we generate all this sell side, we make a buy side of the curve, and we put in the SMT in the macro, and then the entry comes just after that. Another entry could have potentially been the pullback to change in state, giving you really nice risk, but I don't think I would have waited for that, as once price taps here, we don't really need to expect the price to come back to here, but it did anyway. That's why I stopped at the high and not any lower. And after that, price was really choppy, and then PM macro we sold off again, and we just had 2 p.m. I think it's 2 p.m. Yeah, where fund rates come out, and it didn't cause that much. It was not that much movement at all. If we recall the last FOMC fund rate day, it was this. So definitely a day to always avoid, in my opinion. But opportunity is there, but I won't trade the next one because it's not in my plan. So that's a market recap. Hope that's useful. Peace. Obviously, all hindsight. So take what you want from this. Peace.